Next up, we have with us Mr. Thomas Mathew, MD, Odisha Capital Market and Enterprises Limited. His topic would be Capital Market, a tool for wealth creation.
So I wanted to save time, and I said no introduction. So let's straight away get on to the topic. And I had been given half an hour, but I am sure you don't have the patience to listen to me for half an hour. Neither do I have the patience to speak for half an hour. So let's wind it up in about 5 minutes or so. That is my motto. So today, the topic that has been given to me is that I have to talk about the financial future. So I wanted to make the financial future a rosy picture. So I'll just give you some things that we need to do so that we can make our financial future a more secure one. Is it on? Hello? See, generally what happens is you have a boom time and you have a depression time. So during boom time, whether you are doing business, hello, is it audible? So during boom time, what happens is everybody has money. So at that time, you want to invest in the stock market. But the problem is at that time, the stock market will also be very high. And during depression time, the market comes down a lot. At that time, you don't have the money because it's a depression time. So many people, they ask me, which is the best time to invest your money? I would say it's now, today. So every time is a good time to invest. When the market is at this booming time, you have more money to invest. So at that time, you invest. When the market is bad, so at that time, the economy will also be bad. At that time, also you should invest because at that time, the price will be low. This is one simple philosophy. And today, I had 4 against 1. 4 people talking about mutual fund, 1 person talking about the capital market. So I have an advantage of being the last person. So at least they will not be able to challenge me or override me. That advantage I have. So let me talk about the capital market. So today, Sir, please pay attention. It's something related to what you said. So today what happened is you have different opportunities. Like you can do your own business, like Sir is advocating. So I would like to do my own businesses. Or real estate is there, gold is there, then FDs are there. Out of which area you would like to invest your money in? It's a tough question. I'll give you a very simple answer to that. It's not a fine answer, but it's a little related to age also. 100 minus your age. So if you are 30, so 100 minus 30, 70%. So 70% of your money should be invested in equity. If you are 70 years old, 100 minus 70, that means 30% of your liquid funds should be invested in the capital market. So this is one simple theory. Now the question is whether you want to invest your money in the capital market directly or you want to invest into the mutual fund. So 4 people are advocating invest through the mutual fund. I am advocating that you should invest in the capital market directly. Now which is better? A simple answer is if you understand the economy, if you understand the capital market, if your knowledge is good, if you are able to give a little bit of a time to business, then capital market is better. If you don't have the time, you don't have the expertise, you don't have the basic skills that are needed to invest in the capital market directly, then go to the mutual fund route. That is the best way out. Like, for example, a person like me, I am not going to invest my money through mutual fund. I am going to invest my money directly in the capital market. That is the basic philosophy of life. Now, if you want to invest your money in the capital market, so the biggest problem with the capital market is there is a risk element associated with it. So that risk element is associated with the mutual fund also. But there is one more risk which is associated with the capital market. It happens that if you invest your money in the capital market and if you are unsuccessful, so you are out of the market. If you are successful, you become overconfident. And then you start getting into other areas of capital market where you should be staying away from. So the bad reputation of the capital market is because people do not do investment. In a stock market, there are 3 aspects that most people do in. One is simple investment, one is intraday trading, and the next is derivative trading. So many people, when they do a simple investment and make money, they feel they have become the experts. they go into intradtrading. Intra-trading, most of the people will lose money. And once you make a little bit of money in the intraday, then your confidence goes up a lot. Then what happens is you get into derivative trading. And statistics says that 90% of the people who get into derivative trading, they lose money. And about 70 to 80% people who get into day trading, they lose money. That is the reason why stock market gets a bad name. So, if you can control your urge of getting into intraday and into derivative, then stock market will give you a better returns. So, get into that. And if you want to get into equity market directly, so the things that you need to do, there are a lot of things that previous speakers have also said. I don't want to get into too much into it. Like one is the time factor, the patience factor, you should do a study about it. So a lot of things are there. But I just want to take one or two things. Like one thing is simple, keep your eyes and ears open. Like today, for example, which share to invest? Just keep your eyes and ears open. So you are seeing things around you. What are the things that will be there in future? Like previous speaker said that you are filling petrol. Every month you are spending 3,000 rupees. 36,000 rupees you are spending for petrol. Why not invest in Bharat Petroleum or HPCL and IOC? The same way, you are seeing all the lights. So electricity is something that is going to be there for the next 100 years or 500 years. Buy some electricity stocks. I'll give some more my own experience. So there was one company by the name of Bhushan Steel. Many years back, it was not known to me at all. And I saw the balance sheet was good. But then I didn't have much information about that company. Once when I was going to Balasore, and I stopped at a wayside dhaba to have a cup of tea, then I saw that the roof of that dhaba had Bhushan Steel sheet. Then immediately I realized the company which is in Delhi is able to manufacture and sell in Orissa. That means the company will be good. The price of Bhushan Steel was only 14 rupees. I bought at 14 3,000 shares in those times. And later on it went up to 4,000 rupees. So what is the lesson? Just keep your eyes and ears open. Once I was going for a morning walk and then I saw that's a strange type of vehicle. I said, what is this? I looked at it. It was written Magic. And I went to the front. I said it was manufactured by Tata Motors. Immediately I purchased Tata Motors. And that gave me fantastic returns. So that is how, if you have that attitude towards the stock market in identifying a particular share which is going to do well in future. Like you said that, won't it be better to do business directly? Of course, it will be. But does all your friends who are doing business, are they doing well? Or if you are doing business, you might be doing many businesses. Do you make money in all the businesses? The answer is simple, no. There will be very few people who will be making money in all their businesses. The same thing happens to the stock market also. Essentially, what you are doing business by investing yourself, I am also doing business, or they are also advocating business, but doing that in somebody else's business. So if businesses are going to give you good returns, then definitely equity market and mutual funds are also going to give you good returns. And statistics says that equity investment has given you the highest rate of returns. So equity returns is doing business yourself also. That is also like equity only. It does not make any difference at all. Now in the last 5 years, gold and silver has also done very well. And that is one other reason why I would strongly recommend you to stay away from gold. Because any asset class, any investment will be giving you a good return in the long run. Short term, it's unpredictable. But because gold and silver has given you fantastic return in the last 5 years, the next 5 years, I am quite sure is going to give you a very flat rate of returns. Whereas in the last 1 year, the stock market has given you bad returns. So the next 5 years, stock market is going to give you a good returns. And today, Tinath sir just told you all that there's a big loss in the equity market. You all are not aware of it because it happened after the closing of the Indian stock market. The prices have fallen. So probably on Monday, the prices in the Indian stock market are going to come down, and that would be one of the best time to invest. Another simple example I can tell you, World Trade Center, September 11, which year was it? 2001. So the entire world felt that World Trade Center has been demolished, America might go bust, and entire world equity collapsed, Indian equity also collapsed. And the next day, whatever money I had, including the small amount of cash that I had, I put it in the stock market and it gave me fantastic returns. During COVID time, everybody felt that the prices are going to fall. So I invested. I told my son also, you invest. Then you know what he said? He said, Papa, don't you think that COVID is going to spread more? I said, yes, it will. Then don't you think the market is going to fall more? I said, Beta, then you don't invest, I'm going to invest. And I did invest, and I got a fantastic returns for my investment during COVID times also. So another simple philosophy that you need to understand is the greed and the fear factor. So when everybody becomes greedy, that is the time you should fear. And when everybody starts fearing, that is the time you should become greedy. In other words, when everybody thinks that the market is going to fall more and more, that is the time to invest. And when everybody in the market says that the market is going to go up and up, that is the time to sell. If you can understand this philosophy, the stock market is going to give you a good returns. So either invest directly or invest through the mutual fund. That choice is on you. I have made my choice. I invest directly. So they are convincing you to invest through the mutual fund. Up to you. Thank you.